Investing can be a scary word for people, especially those who haven't started investing or don't know how it actually works. I don't want to lose my money, I don't have time to watch the stock market all day. The thing is, you don't really need to do that at all. And risk can be easily managed and reduced by a ton. In this video, I want to talk about how to invest and what to do when you start investing and how it's actually not that risky as many people think it is. And also how it can lead to a better financial future and perhaps financial freedom. Comment down below your thoughts about investing. I'd really like to hear some opinions. Remember that I'm no expert at this field. I just share my knowledge, my perspective, and what I've learned. Remember to smash that like button and smash that subscribe button as well. This is Risky Freedom. Let's go. Let's talk about investing in general. What does it mean and what is investing? If you're completely new to investing, like I was not that long ago, there's a definition that helped me out a lot when I started out. And it goes like this. An investment are assets or items acquired with the goal of generating income or appreciation. There are a lot of different types of investing like dividends, shares, defensive investing, cash. I'll probably make a video specifically for different types of investing as well. So why start investing? This is the question I asked myself many times before I took a leap and started my investing journey. There are so many positive sides to start investing, and there are also negative sides as well. If you're in it for the long term, I only see the positive sides outweighing the negative sides more and more. Now, let's look at some reasons why you should start investing. The Investopedia article written by JB Maverick says the S&P 500, which is the market index for the 500 biggest companies in the US, has had an annual return of 8% from 1957 till 2018. And an article from Business Insider written by Liz Nuven says the S&P 500 has done slightly better the last 10 years with an annual return of 13.6%. You have Nasdaq's stock market as well and Dow Jones Industrial Average. The Nasdaq includes over 3,300 companies and the Dow Jones has 30 big publicly traded companies on Nasdaq and New York Stock Exchange. Now this is the biggest why of them all, in my opinion, why you should start investing. The return you can get from investing is way better than just letting your money sit in the bank and decline because of inflation. When I learned this, I knew that I had a huge opportunity to grow my capital and make a better financial future for myself. And this offer stands for you too. Now let's talk about something more scary: risk. Nothing comes risk-free in the stock market and investing, but it can be easily managed. If you plan to invest in stocks short-term and try to make as much money as possible in the short term, chances are you're probably going to lose more than you will profit. Short-term investing in stocks and day trading and all of that is something that you really have to try to master to become good at it. And in the stock market, there are a lot of experts that you're competing with, so it's really, really risky. If you just started investing, I would highly recommend you to invest long-term. So to manage this risk and invest in the safest way possible is actually liking this video and subscribing to my channel. In all seriousness, the safest way, I believe, is mutual funds. Mutual funds are a great risk reducer in the market because of the diversity it gives you. When you put your money in a mutual fund, there's a fund manager who manages your money and splits it into the different companies that this fund is investing in. If you invest in a mutual fund that has, for example, 2% in Tesla, 2% in Apple, Microsoft, Amazon, all those tech companies, your money will be diversified through all those companies in that fund, making the risk way, way lower. So if one or two companies performs badly in that fund, maybe the other companies perform way better, which will leave you in profit anyway. This is a super nice risk reducer because you don't have all your eggs in one basket. Now this is the way I started investing in mutual funds. It's a really nice way to get you started without risking too much. However, mutual funds should be done long term. It's not a get rich quick scheme or something like that, but it's a really nice way to grow your portfolio. And stocks are something else. Stocks can be seen as an ownership or a share in a company. So if you buy, for example, 5 stocks of Apple, you own a little bit of that company. Now at the start, I didn't invest in stocks at all. I only did mutual funds, which I still do a lot of the time. In stocks, if you're trying to make money quick or short-term investing, you really have to pay attention to the news all the time, what's happening in the market. You have to have your eyes open, be alert and all that. And stocks are way more risky because your money is all in that company, not spread in many companies like mutual funds. It can be a good way to make some quick money, but there's a lot of risk and you need to be aware of that. In short term, more people lose money than make money. So be aware of the risks. Now, investing in stocks long term is also riskier than funds, but it's more reliable than short term investing. Now, of course, if you invest in a company for 5 years and it suddenly goes bankrupt, you're screwed. That's why if you want to invest in stocks, you really have to do research in the company you want to buy and ask yourself this question: do I see a nice future for this company? Do I see them growing rapidly over the next 5 to 10 years? And if you do, if you have faith in that company, go ahead, buy some stocks. Long-term investing in stocks can make you a lot of money over the years, but be aware of the risks. It's way more riskier than funds. Also, something that I really focused on when I started trying to invest in some stocks was never use more money than you can afford to lose. Also, in stocks, you're going to see a lot of red days, so you have to put your emotions aside when these red days are coming. You're going to see a lot of loss and you're going to see a lot of gain, but a lot of loss as well. If you can't handle loss over time, maybe stocks is not the best option for you. So, how do you start investing? You need to set up an account with an online broker. There are a lot of online brokers out there, many popular. One of them called Robinhood is really popular. I'll leave a link down below if you want to check that out. Usually the steps to create an account online is really simple. It shouldn't take you more than 5 or 10 minutes. And I'll tell you about the hardest part for me when I started investing. The hardest part for me was actually doing the first step. Yeah, the first step, transferring some money, placing it into a mutual fund, and after that, starting to see the growth. After I started investing, I saw the potential that investing could have on my life, and how it could help me to a better financial future and a financial freedom as well. At the end of the day, it's really about just getting started, and after that, it's way easier. It really is a great way and a great opportunity to build your wealth, and I really think that we should be grateful for having a system like this. Now that is it for this video. I really appreciate you watching. Also, smash that like button and smash that subscribe button. I would love to have you on board on this channel as well. Again, thank you so much for watching. I really hope this video gave some value and perspective. I'll see you in the next video and have a great day.